So we have two options. Either we pay this amount in cash or we add it to the capital and it will become 5,500.
Oh, okay. Yeah, I got it now.
Okay.
Yeah.
So this is interest on capital. Now, how we will adjust this in our final account financial statement? Okay. So now how we will adjust it? So interest on capital, if it is given inside trial balance, always remember that items that I'm writing here can be given inside or outside. If it is given inside trial balance, then it will be charged in profit and loss. It is expenses, so profit and loss account, debit side. And if it is given outside, then one is profit and loss and the other is balance sheet. But in balance sheet, you have to add this to capital
On asset side.
on the liability side.
Oh,
Capital is always on the liability side, yes or no?
yeah, correct.
So if you add to capital, then it will be on the liability side always. Actually, I was not going to write that liability side, but you told me that it will go to asset side. That's why I have written. Okay, so profit and loss account, debit side.
Okay.
Now, interest on capital, same with the interest on drawing. Okay, but interest on drawing is just opposite of interest on capital. The treatment is same. It will be in the profit and loss and balance sheet, but just opposite. So interest on capital is on the debit side of profit and loss. Interest on drawing will be on the credit side of profit and
Credit
loss.
side. Oh, okay.
So it is adjustment number 5. Interest on drawing. Now, if it is inside again, then profit and loss. Credit side. And if it is outside, then one is profit and loss, credit side, and the other is
Balance
balance
sheet.
sheet.
Credit side.
Balance sheet, liability side, uh, add it to drawing or deduct from capital. Both things are same. How
Okay.
both are same? Because if you add it to drawing, let's say, so drawing will be deducted from the capital. Yes.
Yeah.
So interest on drawing is automatically deducted from the capital because it is added to the drawing. Or you can directly deduct it from the capital.
Yeah.
So both things are same. Please write these two. After that, we'll discuss the income part. Then we will solve the question.
Okay.
Okay.
Sir, can you please scroll? Yeah. Yeah, sir, done.
So adjustment number 6. It is accrued income.
Sir, can you go to the adjustment number 5
Yes.
for 1 sec? Yeah, okay.
So accrued income, this is income which is not received. Okay.
Okay.
Okay. So income which is not received is an asset for us because whenever it will receive, uh,
It will be profit for us.
it will be income. But
Yeah.
until it is received, until then,
It's
it is assets.
assets. Yeah.
Okay. So that's why if it is inside, then balance sheet, asset side. And if it is outside, then balance sheet is 1 and trading or profit and loss. Credit side added to a related item. Okay.
Okay.
Leave the trading account. Actually, there is no other income than sales. So leave the trading account. Only profit and loss. Credit side added to related item. Okay.
Okay.
Okay. Now, adjustment number 7. Advancing means income which is received in advance and we have not completed the work yet. So it is advancing. Now, this is a liability for us because if we complete the work in future, also we have to uh, complete the work in future or we have to refund the money. So in both of the case, it is a liability. We have to complete the
Okay.
work or we have to refund the money. Both are
Refund the
liability.
money.
So if it is inside, then balance sheet liability side. And if it is outside, then balance sheet liability side is 1 and profit and loss deduct from related item. Credit side. So this is adjustment number 7. One more, adjustment number 8, depreciation. You know the concept, depreciation?
Uh,
Yes, you know the concept.
yeah.
Depreciation. Tell me. Tell me about this.
I forgot.
Okay, you do not know the concept or you do
Wait,
not.
I knew. Uh, 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 when the value of asset increases or decreases, something like that.
Yes, something like that. Yes, but not increases. It is decreases.
Yeah, decreases.
Yes. So when value of asset decreases due to some specific reasons, then it is called depreciation, like use, like time lapse or accident or new technology, these things. So these things reduce the price of the asset, value of the asset, and that is called depreciation. So depreciation is expenses for the company, or you can say loss for the company. Yes.
Yes.
Okay. Now, the entry for depreciation, if you remember, is depreciation account debit to assets account. Yes.
Yeah.
And the second entry is profit and loss account debit to depreciation. So if you see this, I told you that when it is given inside, then only one entry is passed. And if it is given outside, then both, sorry, sorry. If it is inside, yes,
Yeah.
then only one entry is passed. And if it is outside, then both entry is not included or not done in our books. Yes.
Yeah.
Okay. So the first entry is depreciation account debit to assets. It means this is expenses and this is deducted from the asset. That's why asset is credited here. Yes.
Yeah.
So if it is outside, then we have to do two places we have to write it. So one is profit and loss account debit side, and the other is balance sheet deduct from related asset. Now, if it is inside, it means this entry is passed. So it means this adjustment is not required.
Yeah.
So only profit and loss debit side. Understood?
Yeah.
Okay. Now write these. After that, we will solve a quotient.
Sir, can you go to adjustment number 7?
Adjustment number 7.
Yeah. Yeah, done.
So I'm getting the question here. Can you see the question? Can you see the question?
Yeah.
Okay. So the first question is following trial balance has been extracted from the books of Prasad as on 31st March 2020. There is machinery, cash at bank, cash in hand, wages purchase, stock on 1st April 2019, sundry debtors, bills receivable, rent, commission, general expenses, salaries, capital, sales, sundry debtors, and interest received. Now, additional information is given. Outstanding salary were 45,000. Depreciate machinery at 10%. Wages outstanding were 5,000. Rent prepaid rupees 10,000. Provide for interest on capital at the rate 5% per annum. Stock on 31st March 2020, 8 lakh. Prepared trading and profit and loss account for the year ended 31st March 2020 and balance sheet as at that date. Okay. So this is our
Okay.
question. Now the process is, I have told you in without adjustment part that we have to go by serial number. Every item we have to see, we have to write it in the final account, that is trading profit and loss or balance sheet. But in uh, this part, when adjustment are given, then we have to clear the adjustment first by serial number. So clear the adjustment first. This is our first step. After that, we will go to the trial balance and then we will follow the serial number and write every item in that. Okay.
Okay.
So first we will clear the adjustment. Now to clear the adjustment, we have to prepare the format. This is our trading and profit and loss account. Okay. So we have prepared the format now. It is trading and profit and loss for the year ended 31st March 2020. And the balance sheet we are preparing is of Prasad. Sorry, of Prasad. Particular amount. Particular amount. If you remember, I told you that in trading and profit and loss account, There is debit and credit side, but in balance sheet, there is no debit credit.
Yeah.
Balance sheet of Prasad as on 31st March 2020. Liabilities amount, assets, and okay. So adjustment number one, outstanding salary were 45,000. Now, as per the adjustment we have discussed, outstanding salary is given outside, so we have to write it at two places. One in profit and loss, we have to add it to salary, and the other is liability side. So first we have to find salary here, 50,000. So salary is written in profit and loss account, so we will write here to salary 50,000 and plus outstanding. Outstanding, it is 45,000. So total is 95,000. Okay. The next is depreciate machinery at 10%. Now, machine, actually, there is one more place we have to write it because only one place it is. So, outstanding salary, we will write here. 45,000. Next is depreciate machinery at 10%. What is the machinery amount? It is 4 lakh. So we will write machinery. It is 4 lakh. And we will deduct depreciation from here at the rate 10%. So 4 lakh minus 40,000. It is 3 lakh 60,000. And this 40,000 will go to profit and loss debit side to depreciation on machinery. $40,000. Next is wages outstanding were 5,000. Now we have to find wages. Wages is 1 lakh. So we will write here to wages 1 lakh and plus outstanding 5,000. It is 1 lakh 5,000. And this 5,000 will also go to the liability side. Outstanding wages. Is this clear until now? Is this clear?
Yeah.
Okay. Now, rent prepaid 10,000 means advance. We have paid the rent in advance. So rent is 45,000 and we have paid 10,000 advance. So to rent 45,000 and in this 10,000 is prepaid. 10,000. So the amount is 35,000. And this 10,000 will go to the balance sheet asset side. Prepaid rent 10,000. Next is provide for interest on capital at the rate 5% per annum. Now capital is 9 lakh and we have to apply interest. So capital, capital is 9 lakh. I told you that we have to add interest on capital here. So interest at the rate 5%. So it is 45,000. It will be 9,45,000. 9,45,000, and this 45,000 will go to the profit and loss debit side to interest on capital. Interest on capital 45,000. After that, there is a stock on 31st March 2020. That is closing stock 8 lakh. So by closing stock 8 lakh and one, it will go to here, closing stock 8 lakh. Now adjustment is complete. Once again we will check that every item is written at two places or not. Outstanding salary 45,000. Yes, outstanding salary is 1, outstanding salary 2. Depreciate machinery. So depreciate machinery 1, depreciate machinery 2. After that, wages outstanding, wages 1 and wages 2. Third is rent prepaid. So rent prepaid 1 and prepaid rent 2. After that, provide for interest on capital here, interest on capital here. And then closing stock on the trading account and balance sheet asset side. So all the adjustment is complete. Now we will start from here. The trial balance. Machinery is already covered. Cash at bank. So cash at bank here. Cash at bank. It is 1 lakh. After that, there is cash in hand. Cash in hand is 50,000. So we'll write 50,000. There is wages we have already done. Purchase is 8 lakh. So to purchase, it is 8 lakh. After that, there is stock 6 lakh. Opening stock it is. So to opening stock, it is 6 lakh. Now, sundry debtors 4,40,000. So, sundry debtors 4,40,000. Bills receivable 2,90,000. 2,90,000. Then rent 45,000. We have already done this rent. Yes. After that, commission 25,000. So we will write here to commission. Little small space. Commission 25,000. There is general expenses. Let me write it. To general expenses. General expenses is 80,000. So salary we have already covered, included. Now on the credit side, capital, we have done sales 16 lakh. So by sales 16 lakh. I have not written it inside because there is no sales return. Again, here there is no purchase return, so we will write this amount outside 8 lakh. Now sundry creditors, it is 450, so it will go here, sundry creditors. Four lakh 50,000, and interest received 30,000. So interest received. $30,000. Every item is completed now.
Yeah.
Okay. So now we will calculate total. 16 and 8, 24 lakh. And here it will be to gross profit. Transferred to profit and loss. 14, 15, 8 lakh 95,000 by gross profit transferred from trading account. 8 lakh 95,000. Tell me, is there any doubt you have here?
Nope.
Okay, so now the total of profit and loss. Which side you think is more? It is credit side, 925. 9 lakh 25,000. Now to net profit. It will be 0, 0, again 0, 5, 10, 15, 20, 25, 2, 4, 6, 3, 9, 8, 17, 4, 21, 30, 32, 60, 6 lakh 5,000. Now this 6 lakh 5,000 will be added here, plus net profit 6 lakh 5,000. So it is 15 lakh 50,000. Total of balance sheet. How much? 20 lakh 50,000. And here is 20 lakh 60,000. Let me add it again. 5, 4, 9, 9, 18, 18, 6, 24, 24, and 125. Sorry. It is 20 lakh 50,000. Done?
Yeah.
Tell me, Uh, you think this is easy or little bit tough
Little bit tough.
or more? Because sometimes actually some students says that this is the most difficult chapter. So you think this is the most difficult?
No, no.
Okay. So it is understandable.
Yeah,
Okay. So you understood how we will adjust these items, the adjustment, how we have to account that.
yeah. But when I'll do, I'll want us
Okay.
to forget
So do
half
you
of
have
the things.
any question right now?
No, not right now, but when I'll do, then I'll have questions. A lot of
Yes,
them.
I think. So you want to write it or
Yeah. So can you scroll down a little bit?
yes.
Yeah, here. So can you scroll down? Yeah, certain.
So this is our adjustment. There are actually we have completed total 8. Okay. Now the most important one, the most difficult adjustment you can say is bad dates. Okay. You know
Okay.
about dates. You know the concept of bad dates. What is
Uh,
bad date? So amount which is due on someone, but that person will not pay the amount. So if we think that we will not receive the amount, then it is called bad debts. Not think, we understand, we know it that it will not be received. So that is called bad debts. But there is one more concept related with it is doubtful debts. Means we have little doubt over it.
oh,
Means we are certain that it will not be paid, then it is bad. And if there is 70-30 chance, 30% that we will receive the amount, 70% chances we will not receive the amount. Or there is 50-50% chance, means 50% we will receive it, 50% we will not receive it. Then it is called doubtful debts. Okay, so it is
okay.
not certain that we will receive it or not receive it. We are not certain. So there is some chance that we will receive it. There is some chance that we will not receive it. That's why it is called
Okay.
doubtful debts. Now, bad debt is a loss because we know that it will not be received. Yes?
Yeah, yeah,
Okay. But doubtful debt, it is not an actual loss yet. Yes?
yeah.
Because we are not confirmed. It is still doubtful. So maybe there is some chance that we will receive the amount. So that's why we do not take or assume it as loss, and we make a provision for it. Means a certain provision. Okay, so we make provision for it, and if it is loss, then disconnected. What happened?
I don't know. It left all of a sudden.
Okay, so now we make provision for doubtful debts. It is not a loss, so we only make provision.
Okay.
Now, provision is shown in the liability side generally, but when it is related with any asset, then it is deducted from that asset. So, in this case, we will deduct the provision for doubtful debts from debtors because
Okay.
we are going to receive the amount from debtors and it is doubtful. That's why we are deducting it from here. Okay.
Okay. And when we'll get the money,
Yes.
like debt, then it will be profit for like income.
Yes. Yes. When we will receive the amount, then we will remove the provision. We will reverse the provision.
Okay.
Okay.
Yeah.
So in dates, if we receive the amount in future, then it is a profit. But in provision for doubtful debts, if we receive the amount, then we reverse the provision
Okay.
because we have not recognized it as loss yet. So that's why we just reverse the provision and the amount is credited. Okay. So now one more thing. I want to ask you a question here that which will be deducted from the debtors first, bad debts or doubtful debts? Let
Bad
me
debt.
write an example here, then tell me. Let's say total amount of debtors is 50,000 and there is a bad debt of 10,000. and doubtful debt. 10% provision for doubtful debt. Yes,
First, we will deduct from bad debt because we are sure about it that we'll not get it,
good, very good.
and then doubtful debt.
Okay, what will be the amount of doubtful debt?
Um, 5,000.
Okay, so if the data is 50,000 and in this 10,000 is bad, so only 40,000 is good.
Oh,
Yeah.
oh yeah, yeah, yeah,
So you cannot create this 10% on total amount because you know that this 10,000 will not be received.
yeah.
So this is not doubtful. This is bad. So now you will create provision on this amount. So you assume that 4,000 will not be received. 40,000 into 10%, 4,000.
Okay,
Okay. So amount that we get after deducting bad debt will be used to calculate provision for doubtful debts.
oh, okay.
Okay. So we will discuss this concept